Good afternoon, everybody. This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room special report. Grayscale Bitcoin Trust, extreme level below mean activates buy signal. As we come into this week for GBTC, we are coming in with a bullish signal activated at 9:25. Your stop is 9:25 stop close only. Your initial target is 1090. The market also has activated a B2 level of 760 with a 95% probability that if the price is activated down there, the price will revert back up to the mean of 1090. As we look at the weekly data points for the variable changing price momentum indicator, the VCPMI automated algorithm in relation to the Grayscale Bitcoin Trust, GBTC, it appears that the average price as we come into this week is at 1090. The VCPMI then calculates the extreme above and below the mean using a Fibonacci perfect structure. It identifies two levels above and two levels below the mean. The chart shows that a high of 1283 was made on September 23rd. It corresponds to sell one level of 1255 and a sell two level of 1420. When the VCPMI identifies the sell one and sell two levels, it identifies the area where self-directed traders can find distribution of supply or potential sellers entering the market. The artificial intelligence tells you that there is a 90% probability at the sell one level of the market reverting back to the mean. There is a 95% probability of a reversion back to the mean if the market reaches the sell two level. In my book, Mean Reversion Trading, I describe the sell one and sell two level as very high probability areas for trades. If you are long, these levels are excellent areas to sell or to take profits in managing inventory. If you go short from these levels, they represent a high probability trade. The algorithm uses the 15-minute bar, and the artificial intelligence directs you to a methodology. If the price touches the sell one level the first time, it tells you to prepare. We have reached a pivot point. If you are long, then you go neutral. If you are neutral and looking to go short, then get ready for a confirmation. Then if the price closes below the sell one level, enter the market. In this case, the market made a high of 1283 on the 23rd. It closed below the sell one level of 1255 on the same day, closing at 1230. This activated a short signal and activated a protective level with a stop at the level above 1255 in this case. It also identifies the target as the level below, basically. In this case, the level of 1090 is identified as the target below the sell one level of 1255. The structure identifies the trigger point, a stop, and a target. The target was completed on the 24th by the price coming down to the mean of 1090. That was a pretty decent profit on a swing trading position overnight. Once the target is completed, the VCPMI advises you to go neutral. It does not recommend to trade when the price trades around the mean. It suggests that you execute only the highest probability trades as identified by the VCPMI of the sell 1 and sell 2 levels, or the B1 or B2 levels below the mean. In this case, the market did not reach the sell 2 level of 1420, as you can see up here, because there was not enough demand to penetrate any further support or demand to the upside. The market came down to close below 1255, activating a short trigger. As the market continues to come down on the futures contract, we do not suggest trading the mean. It is a 50-50 standard deviation on whether it will go up or will go down. On the 26th, the market did come down to the buy level, which is a time to enter the market and to go long. The law of 925 on the 26th, the buy one level of 925, as you can see, the price activated a buy signal, a long trigger. The VCPMI identifies levels of supply and demand as the market comes down. The VCPMI identifies the trigger points. When a buy signal is activated, in this case 926, excuse me, it identifies your stop at 925. It also automatically identifies your target, which is the mean of 1090. The market has gone from the extreme above the mean to the extreme below the mean. There is now a 90% probability if the price reverted back up to the mean towards 1090. As we come into next week, we are coming in with a bullish signal activated at 925. Your stop is 925. Your initial target is 1090. The market has also activated a B2 level of 760 with a 95% probability that if the price is activated down there, the price will revert back to the mean of 1090. It appears the 925 is offering a very strong level of support, and we suggest that you maintain it all long positions activated at 925, using 925 as your protective level on a close below, using the 15-minute bar.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.